On to the charts. So this is our technical session for, well, quite a few currency pairs and finally oil prices. So euro dollar remains relatively frustrating. Not that all of you are very surprised if you're watching markets and you focus only on euro dollar. Not too much going on. Okay, so I still think that even though 112 has been the recent low, 111.90 is the post-Brexit high, and for me, line of support, followed by 111.30 and more importantly 110.70. On the top side, we have, well, limited resistance here at 112.40, much higher resistance at 113.35, which was a previous line. Anyway, as you can see, the ranges are very narrow. So in recent days, it's been somewhere between 112 to 112.60. Again, I would like to see a wider range also here. Let's continue with euro dollar. I'll just mention that low support is at 109.10 in case of a huge earthquake in currencies, and high resistance 114.20. Pound dollar cable, much more interesting as always. 132.26 this morning, recovering from the lows. Next line of resistance 132.50, support here at 131.60, not for the first time, but now it also proved itself once again. Further resistance 133.60 and 134.80 is the post-Brexit line of resistance. Of course, the low number is 130. Next major pair is dollar yen. So here we are seeing the strength of the US dollar. So we did see safe haven flows, dollar yen falling under 102, but recovering quite nicely. Maybe the Japanese yen is not that much of a safe haven in the wake of this US dollar strength. And now, but it is working against it. On the other side, when we are seeing a recovery in other currencies against the US dollar, we're seeing quite a big sell-off in the yen. I think that this shows a lot of weakness in dollar yen, and that we could see further gains in the pair. Assuming, well, that also depends on the Bank of Japan. Anyway, 104 is the next level of resistance, followed by another round level of 105. 103, also a round number, somewhat weaker resistance. To the downside, we have 101.50. And between these lines, between 101.50 and 103, I think it's a big mess. 100.80 is the next line of support. These are the technical levels for dollar yen. I'm surprised to see long weeks of high volatility in dollar yen, like pound dollar, and on the other hand, we have euro dollar not moving anywhere fast. Dollar CAD. So currently the pair is falling because the US dollar is seeing some kind of recovery. But look at the trend; it looks quite different in recent days. So the pair has quite pretty technical behavior. 128.30 was a line of support, worked very well. Then we had a climb up and a settling down above 129.10, then a rise above 130. All of these remain relevant lines of support. 130.80 and 131.40 are the next lines. 132.20 is the top side line of resistance in case the US dollar strengthens once again, and then 133.10. Okay, so quite a few lines and, that sort of seem to work quite nicely again and again. Aussie dollar, sort of the weakest link in commodity currencies in recent days, but currently also under recovery. Found support very nicely at 74.40 and now trying to recapture 75, very round level. At the beginning, it managed to bounce off this level, move to higher ground, but then it fell once again. So let's say that 75.80 is some kind of resistance here on the top side, followed by 76.60 and 77.40. Below, we have 74.40, 73.75, and the round number of 73. Kiwi dollar, quite a ride on the Kiwi as well. So many other currencies to trade which are not euro dollar. So we had quite a rise, almost reaching the very round level of 75, but sort of a double top there, and then we fell back down. 74, a round number, still worth mentioning. 73.20, not as strong as it used to be. It worked as very stubborn resistance. and 72.40 is support. Below that, we have the round number of 72. Okay, that's Kiwi dollar. Now let's move to currency pairs I like a bit less. Dollar Swiss under the 98 level. 98 still works as resistance, followed by 98.50. 97, the round number, and 96.40 are lines of support. Why don't I like Swiss franc pairs? Because the S&P intervenes. Tomorrow we'll get a reminder also about that. And they sort of have a floor, unofficial floor around 108, sometimes 107.50 on Euro Swiss. That's the currency pair they care about most. We're currently at higher ground. Perhaps we're seeing some intervention ahead of the rate decision tomorrow. 109.67 is the current level. 110, I would say, is line of resistance, followed by 111.20. Euro, pound, currency which is of interest to so many people, so many Brits living here in Barcelona. So we reached a high there just above 85.30, and we're sliding back down again under 85. Okay, 85 is sort of an important line. 84.20 further support. I should amend this line on the chart. And further support at 83.50, followed by 83. High resistance at 87. Not the technical play here in Euro Pound is not as good as it used to be. All right. Euro Yen currently just under 116. Moving to the top side, all in all, we are seeing some range trading here. 113.80 remains strong support to the downside. 116, I would say, some kind of resistance, not that strong. 114.50 is lower support within this range. Okay, I know that not many traders like it, even though markets are interested in this pair, but this is a very interesting and very volatile pair. Pound yen, 136.40 at the moment. 137.20 is the line that we've seen recently. Don't know why my lines have disappeared from this chart. Let's add them once again. Anyway, so we have this swing high was also some, well, a resistance line. 137.10, a better approximation. 134.40 on the downside, seen quite recently. The wider ranges in pound yen are 128 and 140, and this wide range of 1200 pips can be seen once again shortly if we have some action from both central banks. Okay, so it's a relatively short period of calm in pound yen. And oil prices, once again, very volatile. We did see a big drawdown in inventories. That was why we've seen oil prices rise, but then reports of slowing demand, seeing the pair going down. I think I mentioned this before, but the 45 level remains sort of a magnet for the pair. It tends to bounce out around here, basically halfway between 40 and 50 bucks on WTI crude oil. This morning, relatively stable, but I'm sure we'll move higher. Today we have oil inventories. Okay, so that concludes the technical segment. Let's see if we have any questions and move to the next. Yeah, so I see here discussion. Yeah, so it's a good choice of word, hangover. That's regarding the the British data. I called it a champagne party in July. Yeah, good weather. Ramon X, have we started? Frozen picture. Okay, it is working. Okay, Lucas says bonds rippling lower, but Fed watch outs just 15% for September. Bond traders just following LIBOR short term and not the Fed. Yeah, big mess out there. Yen went up with stocks, now going down with stocks correlation. That's out of the window. Yeah, recalibration period, as Sinatra says. Right, so and RMB now entering the SDR system. Yeah, it's an interesting period. Usually when you have changes in trends, changes in correlations, recalibration period, the yen is not as safe as it used to be. Doesn't have this clear correlation with stocks, which it usually has. Another change we're seeing is the US dollar becoming more of a safe haven. And that, we're seeing some changes in bond prices. So many think that bond prices, after a long period, as safe haven assets, German bonds, US treasuries, Japanese JGBs, all supported by central banks, all in high demand. They reached such high levels. I mean, bonds reach high levels, yields reached low levels, especially in the Eurozone. So investors thought, okay, these are the safest havens. Perhaps they're better than stocks if you think stocks are falling. But on the other hand, maybe it's better to store the money in cash if we have a negative yield. Or maybe we'll just take profit on the money we already made on it. So we're seeing this cascading event of some kind of sell-offs in bonds. I think it also provides an opportunity, for example, for the ECB to jump back in. So if the yield if the yield goes up, in case of German bonds, above the -40 level, which is the negative deposit rate, the limit of the ECB has more eligible bonds to buy. Okay, so it's sort of a pendulum swing. I think that if the mood remains negative, bonds will still thrive. That means yields will continue going lower. Let's continue to the next segment. Okay.